What are you guys doing?
You don't have any fans, Royce?
I don't have any fans. Only Daniel has fans.
Oh, he has only fan.
Just the one fan.
Only fan.
I only have one fan.
He only has one fan.
And you know what?
But he's big in Japan.
God, I wish. That company was public.
He's rhyming. My problem is he can't even turn his one fan on. Look at that. It's not on.
Yeah. That was horrible. Right. That was absolutely horrid.
We'll do better next time.
All right. All right, guys. Hey, man, this market's been crazy. Let's get all the preliminaries done first. I'm Darin with Arbitrage Trade. I'm the resident ape. I throw poo, and I'm going to throw more poo because I didn't win again this week on the thing at the end. I was there for a bit. My guests are Daniel Hopwood. He is in the top right corner, and he's institutional. Did I? I like that. Mm-hmm. That sounds like a Miami Vice guy, Don Hopwood. All right, so we got Daniel Hopwood, ex-institutional wealth manager. Josh Morgan, aka JPM, he's the banker / real estate guy, and our founder and CEO Royce Wells, and Maximus Optimus, something or other.
That guy.
the guy. If you haven't bought his book, definitely go out and run and get it. Is it on our website yet? A link at our website?
It will be out there shortly. All
right. You can comment below if you want to find out where that link is to order it. We have
add it to the show.
Hey, there you go. Put a link in there somehow. We'll figure it out. Here's your disclosure, though. We're not financial advisors, even though we write books. And this is not financial advice. This is information provided sheerly for entertainment purposes. So we hope you are entertained. And please always consult an investment professional before making any financial decisions, or just let a robot do it for you, like we do around here. We've got to talk about this crazy bipolar half-day green, half-day red market we've got going on.
It was green all day. Even pre-market.
Yes, today it was. But it was really green, and then it got down to, I don't know, lime green. I don't know what you'd say halfway above is. I don't know. But, it was the last 2 days, actually. The last 2 days have been pretty good pumps. So,
I got no complaint.
Why is that, Daniel? Tell us why the things you've said, and I'll add what I'm saying too.
Well, when I was first making the agenda for this, I had a lot of notes that I wanted to talk about on Trump, kind of questioning Powell. And then obviously he reversed hard off of that. So, half of the agenda went out the window.
This is why you can't do an agenda, Daniel, anymore, because it's like half of the things you wrote are no longer correct. So we have to keep.
I know it is kind of crazy. It was like, it wasn't like that for,
you think you're halfway around the world or something.
Right. Man. It's like, the last year, not an issue. The last month, big issue. But so pretty much Trump was, kind of doubling down on the trade war. He was trying to see allegedly if he could fire Jerome Powell, and kind of bringing into question the independence of the Fed, and honestly kind of into question the we'll call it security of the US monetary system. And if you look at countries that don't have an independent Fed from the president, you look at countries like Zimbabwe that have crazy runaway inflation, devaluation of the currency. And so I honestly think Besant probably kind of tapped him on the shoulder and was like, hey, just so you know, the longer you do this, the more it's going to continue to hurt when we already paused tariffs. And so once Trump, kind of started to reverse that stance of we're not looking into that anymore. We're willing to, we see trade talks coming with China. The market gapped up higher on that because, they like to see some certainty where we haven't seen any for a while. So, that was kind of, we'll call it the big news that triggered, some up days. But we still saw gold hit 3,500 on that uncertainty before, once again coming down kind of inversely to the S&P. And, the important thing to note is that we're still in a downtrend. There's no doubt about that. This is, all things considered, still just kind of a small blip of a few up days.
That's true. What I wanted to add to that is Trump was probably approached by Bassett and said, hey, look, all my buddies and my pals at the hedge funds and all the funds are getting their ass kicked. Can you please stop what you're doing? That's probably what really happened. So Trump goes, oh, okay.
Nah.
Just to update those numbers, though, the VIX did drop below. It's down to 28.35. So it did drop below 30 today. The Tesla's up 5%, Amazon 4%, Meta 4%. The Dow was up 1%, S&P 1.57%, and NASDAQ 2.5%. And the dollar's trying to get right back up to $1 again. It's at 99.65 as the gold comes down, and Bitcoin jumped up to 97. I don't know what it is now, but I think it was right around 97.
It's 93-ish, I think. Last I checked.
It's back down to 93, is it?
93,800.
Yeah, okay.
Yep.
We'll have to see what happens then. We'll see if people are doing gold and they're kind of switching out gold and Bitcoin right now. Who knows? The other thing that kind of moved the markets was, speaking of Besant, I still don't know. I've heard commentators say both, but it's not tomato. I guarantee he has a right way to say it for him. Don't make me say what I want to call him. But anyway, he evidently had this I guess a talk with JP Morgan, a private talk with people at JP Morgan, and told them that, hey, we're going to have a deal with China anytime soon. I mean, soon. And so that got leaked out purposefully, I'm sure. And so that jumped the markets when really from the get-go is, now we're close to a trade deal. And then later in the day, when it halved back down again, it was discovered out of the blue that, wait a minute, we're not even talking to them. So just like all the other Fed guys do, it was a jawboning, manipulating the markets up and down. That's my conspiracy hat. And like you said, Trump not going after Powell. So, you guys have anything to add to this? Because why do you think the stocks are doing this, Royce?
Well, it's called a bear market rally.
You said dead cat bounce. Is that happening now or no?
No, that dead cat bounce was about 3.5 weeks ago, where it bounced up a little and then went lower. This is just another bounce, but if you notice, it's not as high as the first. So you can guess what's going to happen next.
And what, do you have to touch it twice going down, and then the third time you go down below?
M is for murder. There's a reason.
That's right. I'll learn a little bit while I'm hanging around here, Royce. What about you, Banker? What's going on?
Oh, I was just going to say we're still not even up to the 200-day moving average.
Exactly.
I
close.
fully expect it to just doink right off of that band. You'll get some algo trading that might prop it up, but unless we get something out of the ordinary that really, really just boosts, and again, we've got a guy with a cell phone and a Twitter handle that will just crash the market at any given point. And
have y'all paid attention to the weekly chart? We're approaching the 200-week moving average.
Mm-hmm.
Oh.
Yeah.
So
and you put that on the 200-day moving average, and that just has a recipe for disaster written all over it.
Yep.
Unless you can bust through it, which no.
Burn, baby, burn.
That's what I'm saying. It would have to really another 2-week long continued rally or something like that, with a couple of breathers mixed in between for us to really get up and over that moving average and to feel comfortable that we've established at least a little bit of a floor. Yep. And I just don't, the way the volatility has been going and the way that the overall uncertainty is implanted, I just don't, I think everybody, and even, you look at Daniel's notes, look at consumer staples or the hottest market, right, year to date, that's a big red flag.
Oh, yeah. Yeah, absolutely. Even Walmart and Target are saying, hey, we need to talk to you, Trump. We're getting killed over here. So, when Walmart's saying that, then yeah.
Wait a minute. No, they're not. That's a lie.
No, they don't lie in the media. Come on, everything that is written is true.
So y'all know how Walmart works, right? Nothing on their floor they own, not a damn thing. So basically, the people who want to be there, they have to pay to be there, and if it doesn't sell, they have to pick it up and take it out. Walmart's not accountable for any of that crap.
Like that net 30, net 60, net 90, or whatever they do.
No, but they're also great at forecasting the economy because of exactly what you're saying.
Yeah, so it's like they're not losing anything. If anything, the people that are on their floor are probably paying more to be on the floor now because things aren't moving.
Well, now that is a whole nother thing, which is what we're going to feel here pretty soon. I think right now we're being all these any numbers that are positive are because everything was stashed up and bought, and so you got all these things, and people are trying to get in before it goes crazy with the rates and everything. So people are buying cars and stuff like this, and they're trying to jump ahead of what the rates they think are going to go to. So what are the rates at mortgage rates right now? Are they back over 7, 6? What are they? Josh.
Oh, it's back. Oh God, it's
7.2. What?
They're back up over 7. It's the highest it's been in 6 to 8 months. We had that little blip, I think 6, 7 months ago, where it popped up over 7. We're back up over that again, and it's just unless we do get some sort of miraculous 50 basis cut just out of nowhere. They did it back in 2001 when we saw a recession and saw a slowdown, and they helped, just out of nowhere kind of came in with this 50 basis cut, and it, propped things up for a minute. So Powell has every reason to do it now. We've got the right numbers. We've got everything moving in the wrong direction. But I think with Trump pushing his buttons, he might, just to prove a point, not do a rate cut anytime soon. But, we'll see.
Yeah, exactly. Or they're teaming together as a good cop, bad cop, and they're doing what, to get all the money for their buds.
I really think that Trump, kind of pushed buttons with the Fed in general, trying to say that we want to basically subsidize you, and we want you to become a part of the government. And then the Fed's independence is really the one thing keeping things from completely being catastrophic at the moment.
So you really think they're independent?
Yes. Obviously there are people that have their fingers in it, but it's one of the great things.
I think they're holding hands.
It's one of the great things about having a committee that is completely independent from politics. Is they can, they'll get together. They might butt heads, but they're going to come to a general consensus without one single person influencing the decision more than the others. I know Trump keeps taking all of this out on Powell, but he's really just the voice box.
The instrument.
Right. He's the one, the medium. He's the one that's relaying the message. He's not the one that is ultimately calling those shots. And so that's why, even if because when he wanted to, the other day when he was tweeting about how, Powell's firing can't come soon enough. Okay, you do that, but then what? You replace him with maybe a more Trump allied replacement, but even then they still have the board of governors. It's not like he can just pop one person in. He'd have to systematically replace either the whole thing or get his fingers into every single one of them. And I just don't see that happening because I don't think
that's 4 years.
I don't think they really like him very much.
All right. Let's speaking of Trump, he's had these trade talks with Japan, and that's the only thing out of this next section we really can talk about. But Royce, have you seen the dollar and yen?
Well, yeah, I've seen the dollar, I've seen the yen. Things have been ugly and pretty at the same time. It all depends on which side of the transaction you've been on, right? So we saw things or currencies versus the yuan suffer greatly as Japan basically started to climb back up, but now things are simmering just a little bit. I saw GBP JPY got back up to I want to say 190-ish, Previously, it was hovering around 175, 178. So basically, it's picking itself back up, trying to get back past where it fell to when we had that little snafu a few months ago with the carry trade, right? But Japan is systematically raising their interest rate, trying to head off inflation, as well as make it where their company stays profitable. I find it very interesting that they are number 3 in GDP right now, and how they did it was absolutely brilliant. Per capita, if you look at the number of banks and loan officers and whatnot in Japan, like 3 to 4 to 1 compared, and density wise compared to the rest of the world. So they basically allow people to open up a whole bunch of little small banks, little small things, and private banking and all this, and they were able to raise their GDP from abysmal to, hey, we're number 3 in the world. So Japan is definitely making moves.
So I see the yen at 143.40. It's definitely down 4% today. Anyway, let's go on to what you got next? Gold? No, we got luxury is hurting. You know what? I have seen this. Oh, by the way, before we move off of the foreign exchange, Germany's doing something right now to boost the euro. Is that what I've seen or heard?
Oh, they were. They got it all the way up to about $1.14. Right?
Yeah.
Now it's ebbed back to about $1.13. Yep. But I honestly think that this is the top for it. Historically, the euro versus the US dollar hovers between 105 and 110. The fact that it made it all the way up to 113 was actually pretty surprising. I do remember seeing it one time about 4 or 5 years ago at 118, I want to say, but that's also far and few and in between. So yeah, it was 1.8, actually made it to 125 in 2021. So where we are now, it looks like we're at a new potential relative high, and I think it's going to find support somewhere back around 110. So these 300 pips or so that it's up right now, make sure you take profit, otherwise you will lose it.
All right, and before we go, because again, I've heard a lot of foreign exchange. I'm bringing all the foreign exchange this week. The franc is they're talking. The Swiss bank is talking about going to negative interest rates again. And I don't know if you remember, that's where everybody used to throw their money at a long time ago.
That's
put
why
it in
money
Swiss
was in
banks.
Japan. Because of negative interest rates.
So I heard the guy from somebody from something I was watching, but somebody I guess was representing the Swiss bank. He was saying that he didn't want to go there, but they will go there if they have to, because it was actually good for them versus what if they don't do it.
Yeah.
So that also affects, the European economy and all that. So, I mean, anything you want to throw in there about that happening?
The bond market.
Yeah, that's what I was going to ask. Is if you remember, because I wasn't really into finance back then, but the last time they went negative and everybody wanted to put their money over there, Austrian banks too, right? But I don't know. But Swiss, it was definitely them. I remember hearing about that when I was younger. And so, what's the consequence there? You said just yields?
More than that, the negative interest rate means they're technically paying you to store your money there. They're giving you money. Your money is appreciating faster with them than in any of the other banking institutions. So it definitely makes it a safe harbor if you're trying to avoid taxes or anything else. It behooves you because it's almost a risk-free investment.
So why wouldn't companies take all their money out of these banks here in the U.S. and send it over there? I mean,
that would be folly, but that's not to say you can't have at least be diversified. So it's not all over there, but a portion of it is over there. Yeah.
Gotcha. All right, so let's move on to the. Or do you have anything about foreign exchange, Josh?
No, not really. I just, I guess anecdotally, I saw an article the other day about how you're seeing a lot of the, upper 10% of Americans that are actually rushing to open like Swiss bank accounts.
Right.
And I wonder if they're kind of, going with Switzerland moving to the negative interest rates, they're trying to capitalize on that wave. Like we've seen, waves in previous, like in COVID. And I think when there was more economic uncertainty, you see a lot of people moving off, accounts offshore, because what if we get a full-on recession or depression and we get a bank run, something like that? A lot of people are protecting their assets, moving it overseas, and specifically to Switzerland. So I wonder if we're kind of maybe seeing them capitalizing on that by wanting to add, tack on the negative interest rate. So then you get the additional borrowing opportunities from the surplus of income. I don't have an answer for it. I just thought it was an interesting parallel between the two.
Yeah. So, I was trying to lead into where we're going with this next one, which is the luxury trade, or the luxury goods. We've talked about that before. China loves to buy the luxury, and just people in general like to go over to another country, buy the luxury that's cheaper there, and then come back to the U.S., all that good stuff. So, but we've had some issues here with luxury. Luxury is not as hot as it used to be. People are hanging on to their money and they don't want to spend it, and they'll just kind of, I guess you could call this a luxury indicator. I don't know. The Lululemon indicator. I don't know. But anyway, you got yoga pant indicator. I don't know. We'll come up with something. But luxury is hurting, is the title here. And LVMH, which I have learned these over the period because, CNBC loves to talk about these luxury guys. You said it had its worst sell-off since 2020. What else is going on in the luxury world there? I know we had a merger or something happen too.
Well, so the talk of luxury has been that the company that owns Hermes, as far as market cap goes, finally surpassed LVMH.
Yes.
But even their earnings, which were better than LVMH's, are still showing a decline in sales. But really, since like mid last year, that LVMH is down almost 50%, and that's kind of maybe a leading indicator of the forecast of slowing consumer growth. And historically, there have been times leading into a recession where these luxury companies kind of start to decline before the rest of the market. And with the decline in sales, really the reason that this is kind of early is that there was a period of time where the Chinese consumer wasn't really leaving China too much to consume, because the big, we'll call it the luxury trade, was the Chinese would go anywhere else other than China, mostly Europe, to buy these luxury goods because they could get them cheaper outside of China, and then go back to China. But then once, China kind of clamped down on, travel and what people could do with their money, you saw a significant decline in the sales at, these big luxury retailers. And so I think, this is kind of like a good canary in the coal mine of, once you start to see them forecasting growth, that things are actually potentially going to like turn around. But I don't think that is until you see, some agreements on tariffs, and then, use this as a confirmation of like, oh, they're starting to see growth pick up again. Because right now they're not predicting anything good.
Right. I mean, we already saw the four walls luxury places like Macy's having trouble. So there's been little hints over the last year or two on that. So it's not, like I said, they like to throw everything under the Trump umbrella, but these things have been cooking and stewing for a while now. This is nothing new. Mm-hmm. It's just now they have a new excuse to throw it under. Not to say that, doing these Trump things don't have also an effect. This next thing you're talking about, the death cross. And I did hear even CNBC talked about a couple of death crosses. So what you got about that? We know that we don't like them usually.
Oh, we love them. We love them.
Well, if you're playing it right, yeah. I mean, hey, that's again, you make money either way. But what did you write about that, Daniel?
Let's go.
There you go. Yeah, first of all, explain a death cross, Daniel, and then what's going on.
Yeah, so death cross is when the 50-day crosses under the 200-day moving average. And,
meaning what, though? Let's break it down, make it even simpler, though. Meaning that a short period of time is crossing under the longer period of time, right?
Yeah. So, the moving averages.
50 days.
Yes, versus 200, yes.
Yeah, so the moving averages kind of show, the average price over those many days. And so it's kind of showing that, momentum is strongly down now in the market. And obviously with a name like the Death Cross, it's kind of, like, oh my God, things are doom and gloom about to get bad. But when you look at the kind of history of it, is that they actually happen at market tops and market middles. So it's not like, the complete death sentence we think. And if they recover relatively quickly, it's really just kind of like a blip on the radar. But the thing is, if it doesn't, then it does get pretty bad. So, we kind of have like very small window of it crossing for us to kind of determine where it really stands. But regardless, about like 6 months after a death cross, you actually see on average a 7% return in the market. Obviously, who knows, this time can be different, but it's not quite the death sentence, pun intended, that, everyone makes it out to be.
Well, I remember you saying that after the inversion happens, X amount of months after, now we could throw on top of that big pile of, we can throw in the this cross, which is the death cross, which, by the way, happened a week of Easter. Let's get religious and spiritual here.
Yeah. So that's what happened to the Pope. Got it.
Yeah. And the Pope died too. And the Pope died.
Damn, even the market got the Pope.
It wasn't JD Vance, it was the death cross.
And old Schwab left the WEF too. There's lots of things happening. Yeah.
Is he going to become the Pope?
So if there is all these things happening, and one gives you this statistic of 7 months after, and then you throw in the statistic of after an inversion, X amount of months after, where are we now? Are we up to a year after, 3 months after? Does one take one away, make it shorter? I don't know. All I know is that it's all those black swans we were talking about for the last year. It seems to be jumping in at once. And that's why old Besant said, hey, Trump, we got an issue. It's going to happen anyway.
Darren, I do think you bring up a good point, though, of that.
What?
Once you, once you have all those, kind of indicators of like a bear market, right? You have the inversion, you have the death cross, you have, a healthy market doesn't make 10% moves in a single day to the up or downside, right? That's a bear market action. And once you have all that kind of, activity in the market, and then everyone has consensus to the downside, the market's always going to cause max pain, right? So what's the other way of that? And I'm not saying that is the case, but it is an interesting point of that we have all these things that are bearish, and what is, probably the anticipatory state of the market, it's bearish. So, it's kind of interesting now what's the upside?
The scariest part is what we don't talk about and is not being talked about. All the stuff that's in those Fed reports, all the stuff that they don't talk about, on top of all this stuff that they do talk about. I put it out on one of the 3 things this week is the hedge funds are at the top. They are 15 times more as far as what they hold than they held in 2008 and when we had all those issues. So, it doesn't mean that that's going to happen again, but if it does, it could be multiples of what happened. We've said that before too over the last year or so, is that some things are indicators that goes back to the Depression in the 20s. So it's just we're all just, it's like we're just waiting for the jump scare. What are you saying, Royce? I know you got something in there. I saw you.
There's a couple things. Some of it's a little tongue in cheek, and some of it maybe a little bit too soon. Right. I had a friend of mine send me a joke, said he was running for Pope. Right. I'm like, you can't run for Pope. He's like, no, I have a slogan. Hear me out. I'm like, all right, what's your slogan? He's like, well, it's hell yes, we're changing.
He'd probably get it just off of that if it was a vote.
So that aside and that out of my system.
Next.
All right.
He's been waiting all show for this.
Yeah. Absolutely.
Hang on. I need to change my lights to all red now.
He hasn't been paying attention for the past half hour. He's just like locked in on this joke. Like, wait, are we talking about Pope yet?
He had a post-it note just to remind him.
Thank you, Cecil.
You said two things though. You had something else though, Royce.
All right. So now talking about basically what's going on and basically how that's going to impact the overall market. I do think that basically what we haven't noticed, a lot of people haven't noticed, is like if you're using the arbitrage band trading system, right? We were able to predict the 2000 crash and the 2008 crash, but that was on a daily time frame. We're about to have that same cross on our weekly time frame, which means 5 times the magnitude of fall is where we're sitting on top of right now. And if you're actually
or no,
I'm sorry,
and longer too, a longer time as well.
Well, it's 5 times the duration because you're getting one candle and one candle stands for a week as opposed to a day. So what was about 2.5 year correction could end up being a 10 to 15 year correction if we actually trespass below that line on the weekly time frame. Seeing basically the S&P go from 5,400 back down to about 3,600.
36. Wow.
That's where the mean line is.
Well, but yeah, you said that before, I think.
That's where the mean line, and we hope it holds the mean, because if it doesn't hold the mean, back to 2007-ish. Okay. Which is like back to 2012, 2013, something like that.
And I'd be interested to see what that's like on some of the other charts, like not just specifically the U.S. markets. Like if we go over to Europe and Asia, if they're seeing something similar, because, that could be a predictor of that, giant global D that we were talking about last week.
Yeah. Yep. I think we're already in the global R, so we'll see if it can.
Yep, but that
downgrade
R can quickly turn to a D if you get past 35%. But luckily, it's climbed back up. It's climbed back up. Last week, we're about 14% from that D word. This week, we're about 18% up from that D word. So, I mean, it's actually going in the right direction, at least.
This is a good transition. Is that what you want to look at? Or are we going to break something down?
Hey, however you want to do it. Let's go.
Whatever you want to do. All right, let me announce it here. Crayon in Charts with Royce Wells and starring none other than Royce Wells. So go right ahead.
All right, Josh, did you have anyone that you want any like, for example, I'm trying to remember Poland's and Germany's tickers.
Poland.
So this is, let me zoom in on the.
Yeah, that kind of no, I don't have specifically. I mean, unless you just want to do like the Japan or.
Yeah. So this is the weekly chart. You guys see this? And there's that compass line coming right on top of that pink line for the apocalypse band. This is on the daily, right? On the weekly, this is where we are, and this is where it's been sitting. So the fact that that we're here, I'm actually going to SPX because the numbers actually translate a little bit better. SPY is about a 10th, right? So looking at this guy, we're already below. We fell below the compass line, which is our first line of defense at 5,600, and since then we haven't been able to get back above it. It keeps flirting with it. We fell too fast, got down to 4,800 for a minute, and then picked itself back up. But once again, because these candles are too far from the edge of this band, I'm expecting it to continue to ride down. And we even showed when it started to ride back out where it was overbought in March 10th, when it was at wasn't quite at 6,100, was right at about 6,000 and slowly just started to drift. That, and from where we are, 36 is the actual RSI. The mean line is 2571. So there's a lot of pain. And the worst part is the Dash Pro is already saying it has to touch this 3609. I wouldn't even be as worried if this guy wouldn't have lit up.
Yeah. It's crazy how they're able to keep it up like that. You look at the channels. What does that tell us? The wide channel that you see under there too. That if you compare it to back before this period of time, I'm talking about the price when it gets above that top channel. Add more. There you go. Go backwards and then pull it in so you can see the top and the bottom of the channel. You see how it widens out like that? Look how wide it gets. It has
when you throw volatility into it, that's when the band starts expanding.
So since 2021, it's basically since COVID, that volatility has done nothing but go up.
Oh no, Royce is muted.
Yeah, we lost you, Royce.
That's right. I'll interject something that I thought was interesting that I read this week. I don't remember if I said this last week, but the last time gold was 18% away from its 200-day moving average was right before it consolidated for 3 years.
Oh, wow.
So this chart kind of makes me think of that as when it gets to a particular distance from, in this case, the arbitrage band's RSI. It's,
hang on, this is funny.
In a risky
Royce,
spot.
Can't hear you. I mean, he's just right over there. I'm the only one that has the yelling voice to Royce.
I was about to say, anybody who doesn't know that y'all are like in rooms next to each other is probably really confused.
That's right.
Yeah. We still can't hear you, Royce, now.
You probably have to just, I don't know, unplug and plug in.
And I'm going to put it back to...
There he is.
Okay.
That's not my microphone, though. Hold on one second.
No, we
hear you. It sounds exactly the same, though, so what is it?
Yell really loud. Maybe Darin's microphone will pick you up.
It is sensitive.
Plot twist, Royce hasn't been on his microphone the whole time. It's been his computer microphone.
Nope, I was. I promise you.
Okay.
I'm playing with the settings. I'm playing with the settings.
Okay. Well, stop playing with it. You keep coming back and you keep playing with it and you go away again.
That's what
we have a big storm going on right now, too, by the way. We'll blame it.
Computer. The snowball apparently just died.
Oh, no.
Yeah, right?
Lightning just got to it.
That's all right. We will live to fight another day. But yeah, do you guys see gold where it is on the apocalypse band on the weekly time frame?
Mm-hmm.
Yeah.
Mm-hmm.
It's out there.
Can you go look at I think it's 2021 is when it hit its at that point in time high and see how far away it was. If it looks similar.
Wow, that's still way down there compared to now.
That's still low compared to where it is now.
Yeah.
Half?
It was like the last time that it actually.
Oh, there we go. There we go.
2011.
Sorry.
1800, 1900, 2000. Okay.
Yep. So there's a lot of pain out there. A lot of pain. So good luck.
There was some. I don't know if they're just trying to push people into silver, but they were talking about how silver is now going to make its move.
People think that. We can actually look at silver real quick.
Well, while you're at it, you might as well.
No, that's my pick. Let's move on.
Okay. We got to go to it anyway. I don't
believe
it was.
You're going to gooch it.
Oh yeah, definitely not silver. Silver has a red cross at the top. They've lost their mind.
Look at all those O's.
It's like, nope.
Oh, that's throughout. What is this, weekly? Yeah, that's weekly.
That's on the 4 hour. Let me push it to the weekly. And that should get rid of some of that noise. And yeah. And I'm going to go all the way to the advanced band. So that way it's tuned into the big band that we're looking at and not just the other one. So that means there are a couple of Z's, there are a couple of O's, and a dollar sign saying that this is a top. So yeah, don't go put your money in silver.
What is
I can say that comfortably talking about this commodity.
Yeah. We're going to talk about copper now. No, I'm just kidding. And nickel.
Nickel, lean cattle. We can talk about any commodity you want.
That's right. All right. So you said that this is, well, we got to pick something else then, Josh. You can't do silver.
No, I was going to.
Wait, why can't he? Well, the range is stupid small, 33 to 32.
He was kidding.
All right.
Might have been kidding.
Look up AG.
AG?
Yeah.
It's gold, isn't it, too? Oh, silver. Okay. Yeah, I knew it was one of those.
A different silver. This guy, woo.
It's just interesting to me that, like, we've seen such a rise in gold and silver prices, and yet some of the, like, silver typically goes lockstep.
Believe it or not, this guy might actually be able to run, but its range is itty bitty. Because we're sitting at the bottom of the band for this guy to actually make a run. And it could do it. It got about $6 to $8. Everybody gets 50 cents.
Okay, that's see, I was thinking like 5 to 8, but yeah.
Yeah, 5 to 8. We could squeeze. Yeah, we can try.
Okay.
Look at that algorithm pattern there. since mid 23. It's not how it goes at all.
That's the point. Like, that's why it kind of stuck out to me, and I was interested that we somehow quickly segued to silver. But it's interesting, like some of the silver miners and silver producers have really lagged behind in this bull rush that we've had for all these precious metals. And typically, gold and silver kind of go in lockstep with one another. Maybe not exactly, but you'd still think they would break through like gold has, and it really hasn't. I'm just curious as to why that is, and it's not an answer that I have. It's just more of a question.
Well, I mean, you got the miners and the actual.
Yeah, I know. It's like, at least when I've looked into it in the past, like I can't speak exactly to right now, but it's like kind of any of call it commodities or energy. They typically take a lot of capital to in this case mine gold, right? And so typically what happens is, as the markets decline, their gold is less valuable, so they kind of get like less investment. They're like very debt heavy businesses, and so then when gold starts to rise, they start to get that investment, but they still have like the prior debt on their books, and they don't like sell it right away. So it typically like kind of lags behind gold prices. It's not as like immediate. So it's like, but you are right that they haven't performed with the rise in gold that you would typically see. And I do wonder if that is because, like, this is maybe really more of a trade than like kind of like a true demand for gold, right? If people are just trading what's currently on the market instead of buying more, where if more electronics were being made, then like more actual gold would need to be mined.
Cool. I just think there's so many things that are manipulated so many ways that it's going to take a blow up to get back to. Because even the new SEC guy that came in, one of his first things he said was he wants to get back to a fair and equal market. Anyway.
Yeah, right. Sure. I believe that.
Yeah. Sorry. It's a comedy part of our show. We'll see.
I mean, counterpoint, Daniel, like, Royce, can you pull up GDX?
GDX, okay. Yep.
That's a miner, isn't it?
Yeah, it's a gold. Yeah. It's a Van Eck Gold Miners. It's their ETF, so it's a bundle.
Yep.
But I mean, like, compare that chart to the previous one. I know it's not
the opposite.
Yeah, but like this has really. I mean, this has gone up almost 50% in a year. Whereas with silver miners, it just seems to kind of be bouncing around back and forth between a channel.
Are they both ETFs?
I'm sorry?
Are they both ETFs, the ones that you're comparing? Or they're
no.
ETF to ETF? Yeah, I didn't think so.
I get one's a basket, but I mean, irregardless, you'd still think there would be similar movement. I don't know, it might just be a terrible example, but
I'm just saying ETFs, you know what I've called them over the years. Extra tools for fraud.
No, wow. You know what? Just when we were uncanceled, there you go.
I got a lot of people that agree with me online on that.
Something I've observed.
The games they can play with ETFs, it's ridiculous.
Yeah, you are right though. There is some kind of normally a correlation between gold and silver, but it's definitely not playing out right now. And I once again do wonder if once again it's less of like a true resource driven rally versus
right.
banks and governments stocking up on it.
No, that's a good point. I mean, if you're talking about like production versus existing.
Yeah.
I don't know if we're getting a whole lot of verification of any movement. So I mean, it was just what you wait for.
Pork bellies. No.
Oh, can we? That's
lumber futures.
Oh, let's talk about real estate. All right. So you still got to pick one then, right? I mean, we weren't going to do that silver one, so we're going to move on. That's the.
Are you wanting this one, Josh, or
no? That's cool. Y'all queue something up. I'll pick something.
Okay.
What are we queuing? We're just waiting on you now, Mr. Winner. I guess I can talk about that. Here's the scoreboard.
While I'm doing this, go ahead and sing my praises and pop the chart.
Yes, that's what I'm doing. I've got the scoreboard up. And oops, I got a little throw up on it. Let me wipe it off. Okay.
E-Trade talking about? The Apes are winning.
He's my teammate, I know, but he's my entire team. I'm the water. I am the water boy.
Get an honorable mention.
I mean,
I know.
Daniel's holding up the other side.
Remove me as number 1 on that list there under.
I at least contributed to Daniel's point.
Number 3. Ouch. All right, so we're what? See, I'm not even listening to him anymore. We are 9 weeks into season 3, and Josh is over 50% now. He is at 5 of 9, and Daniel is at 4 of 9, and the Apes are at the same thing because Royce and I have not scored yet, but Royce has a plan. He says.
I definitely have a plan,
and I am not in that plan. So
you definitely.
You know what? No, the plan is for me to end up 0 after 18 weeks, 20 weeks.
Yeah, that's about right.
Dude, that would be nuts.
That would be.
It'd be
okay,
beautiful.
I got one for you.
I mean, last week though, I mean, it was in my channel for a bit, and just that's whatever. All right.
It's one that we were talking about earlier, and it also, it is one that has been seemingly bought up in these times of recession. It's kind of a recession-proof pick typically, but let's go with Walmart.
All right, let's do it.
It could be interesting.
Just enough volatility lately that we should have a decent spread.
All right, I'll pull it back up again. Here we go. Here's Walmart. Ooh, it went on the cross too.
At the cross. On the weekly, where is it? Ooh.
Got a Z up there. Falling from the Z.
So, no, everything looks great. Look, everything looks great.
Yeah, see, this is what he does in the past ones.
Well, got you.
Go from,
it's something if Royce goes, ooh.
Yeah. He's thinking about what kind of devious plan he can come up with.
90 to 98. So everyone has about a $2 range.
All right.
90
trying to
to
beat
98.
the storm from knocking our power out here.
Yep. So
but you already
90 to 98. Okay.
90 to 98. Walmart. Let's go.
Right. Oh,
ooh,
Josh, you get to go first.
Yeah, I'm looking.
Let me help you. Let me influence your decision.
No.
94, right in the middle. He hit right in the middle.
Pretty. Look at that. Look at that. Plenty of room.
Just
look, it's only going to show you what he wants you to see.
It's sitting
right, that's a 30-minute. He went all the way back to 30 minutes.
And I'm even being fair about this. It has a 99.82% chance of staying between that $98.69 and $90.
That's what yeah.
Thus our channel.
Thus your channel.
But I see the Z Pro is negative 32%.
That's on the arbitrage band, though.
This is what we should do. Instead of it being like 92 and below, the channel should be strict, like, 90 to 92 at the bottom, let's say. And if it goes outside or above our main channel, we'll give the points to Darin.
No, and I'm not taking charity. No. That is not happening.
I like that.
We're having to get some training wheels now.
Because I know Royce, he would come up with a special, like maybe a handicap type of pips for me.
It'll be the new arbitrage assist.
It'd be pips in a wheelchair.
Points, no one else.
Oh, arbitrage assist.
Pips in a wheelchair. No,
wow.
No.
Okay.
Although it would be interesting to do if it didn't fall on the channel that nobody gets it. But
no, Darin, you get it. Someone's got to get it. You've been a great sport.
They don't have to.
Yeah, I really want the current channel. I want like 94 to 96.
Okay, so that's what you're calling?
Okay. 94 to
yeah,
96.
I just don't. There's a little bit of up, there's a little bit of down, there's bands kind of tightening. If it can just hold.
Last Friday night? Oh, never mind.
Yeah.
Who you got coming next? Are you gonna like I've got my handicap in my window?
I mean, all right. Okay.
I'll try my best.
Should we give Darin like a 4-point spread on it?
You said that every week.
That's terrible. That is terrible.
Like, do you want me to give you a hint?
No, I don't need a hint. From everything I just saw, Dad, everything I just saw,
okay,
I'm going below you on this one.
There you go.
All right, so you were 92, 94?
Uh-huh.
All right.
No,
yeah.
94 to 96.
94, 96.
Yep. So I am 92 and below then.
Yeah. No, 92, 94.
92, 94.
Oh, you were 94, 96. Okay.
Yeah.
That's interesting. I don't know, though. I don't know if I want to go all the way down there then. That is a tough decision then. But we'll take the middle. I'll stick with you, Dad. I'll be right below you. 92. We have the 92 to 96. All right, so one of you guys has to take the top and one has to take the very bottom. So it's like a bunk bed selection here.
What? No.
All right, Daniel, do your thing.
Top or bottom?
Oh, me? Top or bottom?
Yes, sir.
Yes.
Just be careful, we might get canceled.
Yeah. Talking about dad and son, and yeah, we gotta stop that. I mean, you've only had 10 minutes to think about it.
Let's take the bottom.
Yes, you've chosen.
He said yes. Now he's going to pull out the card he's been holding.
Everything is proceeding as I have foreseen.
I was waiting for him to say that. You got to say that in a more evil laugh or evil way.
Yes. Yeah. Good.
Do your hands like this.
I'll give Darin a half point if it goes outside of.
Here he goes with the charity.
Outside
Still,
of
I'll
90.
tell you. This feature is no longer going to be in our show anymore. There's going to be. I can't get it to work. It won't come up. All right. Oh, stop it. All right. So let's get back and get out of here. The storms are raging here in Memphis, and we'll see if even Daniel and I can stay after and do our thing. So thanks, guys, for coming in. Never a dull moment here, especially during the Trump era. Don't think it'll ever stop. So we got plenty of material every week. We are getting to where we need some event to happen, though. This is kind of same type of stuff, just a little different flavor. So not that we're wishing something grandiose to happen, but we are. So
as Josh would say, we need a new tweet.
Yeah, I was just about to say, like, just literally just open up Truth Social and wait.
Kind of did that with China. Or whatever it was he did.
Gosh, I don't know if you've seen the I think it was like when Biden was talking or something, Trump, like the video of Trump, like in, I don't know, some kind of like suite, and he doesn't even tweet himself. He tells someone else what to tweet. He just like says it to him. He's like, oh, this. He's like, tweet that. Like,
you know what? Tweet that.
It's kind of like he doesn't have email. He like writes notes and then they take a picture of it and like that's the email.
No way.
Well, like we just said, let's see what happens in a week, and we'll see if I can get my first, or if I'm awarded a handicap one, handicap points next week. All right, guys, take care. Safe trip home.
Later.